All right. So, okay, hold on a quick. Yeah. So, like I said, this dude ICT, man, he has so many concepts that don't make no sense, but I'm really trying to hone in on one, maybe two,
Yeah.
strategies. And so this is day trading. So I'm about to show you what I've been learning, and just kind of show you on the chart, and then we'll go to your chart, and so you kind of see for yourself on. So it'd be interesting to see how this works on forex. So hold on, I'm pulling up the chart right now. I just want to pull up a few examples, and I'll show you.
Oh,
It's straightforward too. It's kind of crazy. Hold on. All right. All right. So let me scale the chart out, and then I'll share my screen. All right. So I'm about to share my screen. Okay. So can you see my screen?
yeah, I can see your screen now.
Okay, cool. So this is investing.com. So this shit is kind of crazy, man. And I'll show you. Okay, so the white lines is the new day. So I took the boxes off like I was showing you before, because when I'm back testing, I need to take the boxes off because it shows me the high and the low, and I need to know where's that myself. So look, this is how this works. So but what happens is we have to, ICT said the following day, because this is one day, right? And the white line symbolizes midnight. And this is the next day, right?
Yeah.
So you may be asking, like, well, what is this box right here? So listen, ICT said mark up the highest high and the highest low between 1:30 and 4 p.m. and 4 p.m. Right? So this is 13:30, which is New York, which is military time. 13:30 is 1:30, right?
Yeah.
So this is 13:30, and this is the highest high, and this is the highest low between 13:30 and 1600, which is 4 p.m. Right?
Yeah.
Okay, so let me just type this on here. So basically, he said find the highest high or the high and highest low. So highest high and lowest low between 1:30 p.m. and 4 p.m. Now, the reason why he said do this is he said the following day, the algorithm is going to, he said it's going to seek liquidity above and below this box right here. Okay. So now,
Okay.
but it's going to do that around 9:30. So this strategy works from 9:30 in the morning. So now I'm scrolling over to the next day, right?
Uh-huh.
Okay, so watch this. Okay, so now also what I kind of included, he said mark up the highest high and the lowest low before 9:30. So this is the lowest low before 9:30, right? And this is the highest high, right?
Yeah.
Now what he teaches is you can go short or you can go long at the first high or the first low that price breaks. So if price breaks this high up here, that means that as soon as it goes up here, I can go short, and then it's going to take out the next low. So let me show you. So I'm scrolling to the right slowly, right?
Hmm. You can just do that with your arrow key.
Yeah, yeah. I'm trying to spread the candles out so you can see. So basically, the way it works is 9:30 is this yellow line right here. So price went
Hmm.
down below here because ICT said it's money above and below this box right here. So remember, you have to always look at the previous day, 1:30 to 4 o'clock range, and then you draw it all the way to the next day. Price is gonna, like right here, you see it came up above here, right? So
Yeah.
it got it's money above. Remember, we didn't have this right here before 9:30. So all we had was this box right here. Let me scroll to the right. So he said
Hmm.
if it goes up above this box right here, which is the 1:30, the previous day's 1:30 to 4 o'clock range. Because remember, see on our chart we see all the price action, but on the stock market chart, remember the price closes at like 5 p.m. and then it opens the next day at what 9:30, right, or 9 o'clock.
Yeah.
So the traders on the stock exchange, they don't see all of this, but we do because we trade all times of the day. But the chart closes at 5 p.m. Remember, and then it opens at like 9 o'clock the following day. So um, so this gap right here, if you see price go above this line right here, then remember it's money below this box as well. So it got the money above the box, liquidity above it. Now it wants to go lower, and that's why you see price going lower, going down here below the box. here. So, I mean, it's kind of confusing slightly, but I'll keep going to the left. Hold on, let me show you something else. Okay, so basically, like I said, this is the highest high and this is the lowest low before 930. Also, we got a low right here. So you see that price took this low right here. So it took sell side. So, and then it took this low. So it took these lows right here. It came down to the order block. So now price wants to reverse right now. So basically he said we can go long when it comes outside of this box, or we can go short if it goes outside of this box. I'll show you another example and then we'll mark it up on, all right, quick. We'll mark it up on your chart. Also, another way you could do it is, this is the highest high before 930. This is the lowest low. So what he said, you can actually wait until price takes one of these highs or one of these lows. So you could be trading a little bit longer than the range that he talks about. So right here, look at this. Price took the high. What he's saying is you can go short right here. As soon as price breaks that high, go short to the previous low, which is here, white line. So literally, so you can go short right here. As soon as price takes the high before 930. This is the highest high before 930, right? Because it was right here.
Yeah.
So you can go short there. So I went short here. And the next low was right here. Because remember, this is the next previous low. That's why you see money sign and you see second. That's why I have money sign up here first. This is the first and this is the second. So price came down here and then took that low. So he was saying wherever price takes it, you can take wherever the highest high or the lowest low is before 930, you literally can go short in the opposite direction. I'll show you one more. So this is the 930 range right here. This is 130. This is the 1:30 to 4 p.m. box right here. Now I'm gonna keep dragging to the right. When you see the white line, I mean it's a new day. So it's a new day. So now I'm dragging all the way over to 9:30. If this is like a little too confusing, I'll just send you the video and you can back test in your own time, and we could just continue with diamonds and pearls. But this is something I'm definitely gonna be back testing. But let me show you again. So this is 9:30. I'm looking for the 930 line, which is I have a yellow line on it. Hold on. Okay. So this line right here, this is the highest high and this is the lowest low before 930, right?
Yeah.
Okay. So remember, whichever direction price runs in, ICT said you can go short in the opposite direction. Now remember, we still have to mark up the new lows that's being created as price is going up. So I have to mark up this low. That's why I have this line fat and I have this one skinny right here, because this is a low nonetheless. So as I scroll to the right, you see price took this high right here with that red candle. You're going to zoom in a little bit. Hold on. Okay, so remember that white line is the highest high before 930, and this is the lowest low before 930. But I still have to mark up this low, right? Because this is a low nonetheless. So as price goes up right at 930, it takes this high right here. So remember, I can go short right here. So I'm going short right now, right? I'm going short right as that huge ass green candle is going up. And now where's my target at? Which low? Which low is going to be my target? Right here.
Below the white, yeah.
Right here. Now I could hold out to this one, but we don't want to risk it. We want to go to the next low. So according to what he says is the very first low or the very first high that gets taken, you can go short or go long in the opposite direction and go to the next low. So right here, price should come down to here. I don't know, but price should come down to here according to the way he teaches. So now I'm going short. I'm holding my short. I see a huge candle right there. We see huge green candles. I'm still holding to my short because that's the way that the algorithm is supposed to work. It's supposed to take out the next low. Boom. So it took out this low here. Actually, I should have marked up this low as price was going up. I should have marked up that low, but as I continue to go to the right of the chart, it eventually took it out right there.
Yeah.
You see, so this is the highest high. This is the lowest low before 930. Price took out a high first. So according to what he says is I can go short right when that huge candle is going up. Because remember, this is a huge green candle before it closed red. I can go short here and I can go short to the previous low that was made down here. And so I'm gonna show you one more, but we're gonna try this on GU on the stuff that you trade on forex and see what's up. Now this is US 30 right here. Let's look at one more real quick. So I'm gonna keep dragging to the right. Okay, so now this is the 130 to 4. You don't actually have to have the blue box on there. If you could just see it better with price taking out highs and lows, I guess you don't have to drag this box. But this box actually becomes a target, so I'm going to leave it on here for myself. But this is the 130 to 4 o'clock range.
So why are they drawing the 130 to 4 o'clock when we're targeting the?
Yeah, he says that it's money above, and I'll send you the video where you could watch it as well. But he says it's money above this box and it's money below it, because remember the market closes at 5 o'clock New York time, right? For people that trade stocks.
Yeah.
But for us, we look at the end. I'm trading futures. I'm trading indices. So the charts I'm going to continue to see candles all the way up until the chart starts over at 9 o'clock New York time, or 9:30, whenever New York open happens. So what I'm saying is, for people who trade stocks, the market closes at 5. So what he's saying is that he said that the highest high and the lowest low between 1:30 and 4 o'clock p.m. He said the algorithm is going to seek liquidity above and below that zone. Let me show you. So I'm showing you two things. I'm showing you the algorithm thing from 1:30 to 4 o'clock range, and following this whole thing, the highest high and the lowest low before 9:30. Now look at this. The reason I'm keeping this on here. Hold on, right quick. This is the highest high. Hold on, I didn't mark up it's down here. It's down here. Hold on, because the highest high, that's the highest high right there before 9:30, and this is the lowest low, right? You see the white lines?
Yeah.
Now, the reason I'm leaving this box on here is because what I've seen with me back testing this, sometimes price action will be all the way up here. Look at this. It'll be all the way up here, right? But the blue box will be down here, and it seems like this blue box becomes a target for price to stab at. It's not showing it right here, but what I'm saying is, if sometimes I'll back test and I'll see that the blue box will be all the way down here, right? And this would be like at 9:30, it'd be right here. It seemed like price would literally target this blue box. It would literally go it's like it's drawn to it or something like that. That's why I'm leaving it on here for myself. But if it's too confusing, then just look at the whole liquidity thing. Just mark up the highest high and the lowest low before 9:30. This is the 9:30 line, right? This yellow line. So this is my lowest low, and this is the highest high before 9:30. So I'm gonna keep going to the right. Now, according to and remember, I had to mark up this high as well, because remember, this is a high before 9:30 as well, but it's not as strong as this high and this low. That's why I have the small line right here and I have a thick line right here. So let's keep going to the right and see what happened. Now remember, hold on. Now remember, price just took this low right here, right? Hold on, did it take it? Okay, boom. Now remember, remember what I just told you. What did ICT say? He said, mark up the highest high and the lowest low, and whichever one it takes first, you can literally go short or long in the opposite direction, right?
Yeah.
So basically, if price takes this line right here, what does that mean? I can go what?
It will be good.
Long to where? The previous high. Exactly. So according, you just seen this is the third day right here. You see, it haven't failed yet. So according to his teachings, I should be, we don't know what price is going to do right here. I should be able to go long right here, right in the midst of this huge ass red candle. If it takes this line, and I should be able to take it all the way up to this previous high, right? And that should be my move. I'm in and out, right?
Yeah.
Okay, let's see what happens. Now remember, we got a gap up here, so it makes sense for price to come up here and actually go higher to fill this gap in at least one direction. I don't know if you understand balanced price ranges, but
that's true.
Yeah, but basically, if you have a gap, I don't know if you understand balanced price ranges, but if you have a gap, like price has to go up in the gap, and it has to go down in it, and then up, and then it has to leave it, and then it becomes a balanced price range. So anytime you see a gap, you have to, just because price went up, that don't mean that you're done with the gap. You have to be looking for price to go down into the gap and then leave it, and then it becomes a balanced price range. The way it works is if price comes back down into this gap, you have 50%. You have to mark up the 50% of that gap, and if price goes lower, then that means it wants to go lower. But if price wants to go higher, it won't even touch the 50% of this balanced price range. So I don't know, if that makes sense, but that's one of his teachings as well. It helped me not take a loss on U.S. oil this week. Okay, so Okay, so I'm scrolling to the right. Price just took this low, so now I can go long, right?
Yeah.
I can go long up to this high right here, according to his teachings, right?
Yeah.
Now remember, it may go higher because we got a gap up here that has to be filled in, either going up or going down. So let's go to the right. I just went long. Let's see what happened. Boom. You see that? So what he's saying is, now we're gonna see if this shit work on forex. This is what you trade, and you do trade New York session sometimes, right?
Yeah, New York session.
Okay, hold on. So we've seen it work 3 times in a row. So let's go to the next day. Now you don't have to draw the whole blue box thing. That may confuse you. But I'm gonna keep it on there for myself. So you don't have to have it on there. I'll send you the video, but you actually don't really need the box because, and I remember, now look, price went up here and took this high eventually. Eventually took this high. This is the third move. But ICT said the first one or the second one, he said, the first or second, he said after the third one or the second one, it's going to be the probabilities to go down because look, I could have went short right here, but price kept going up. You see, but on the first move,
yes,
the first 2 moves, like he said, you can bet on it to work that way. Here's the first move. Basically, what I'm saying is you can bet on it, definitely doing it on the first time because you can go short. This is the first low that price took, right? So, after 930s, let me show you one more and then we'll mark up GU or 181, whatever you trade. Okay, hold on quick. Let me go back to the left. So I'll be marking this up all weekend, man. All weekend. You know what I'm saying? I mean, because I need to find like a solid day trading strategy. I know how to do the swing trading stuff, like that 5-day Asian range pattern I was showing you.
Yeah.
And we're going to see that actually work out. I think I shot a video and showed you that it worked out. You'll see that GU and EU went in the exact same direction. It hit the 50.
Yeah, it did.
It hit the 50% of the 1 standard deviation, just like I've been preaching about.
Yeah.
Okay, hold on.
I still have the charts here.
Okay. Yeah. Well, let me just show you one more. Hold on. And then you can pull up your chart. I just want to show you this real quick. Let's see. I have it marked up again. I thought I had it marked up one more time. I guess not. So I just showed you 3 days in a row where, so I'm about to stop sharing my screen and we're going to just pick your favorite forex pair, share your screen, and then we're going to mark it up the same way. And a confluence as well on forex. See what I'm saying? And then if we see if on your charts, if they keep messing up, then we know that this is a strategy we definitely can trade on the indices. Because of course he's showing his examples on you on S&P 500. So you can pull up your chart and pull up a forex pair that you anticipate and trading next week, and then we'll mark up this whole strategy. So, but I may have you mark up that 130 range just so I can see it. And then, like I said, if you don't want to use it, you can always, Okay, so this is GU. Okay, so we got to go down to the 5-minute chart. Now, go ahead and mark up New York session, or click on sessions or whatever, the indicator. Also, have you ever used RSI or
RSI
indicator?
No.
Okay. Yeah, I've been toying with it. I don't need to use indicators. I know how to find divergence on my own, but the RSI is it actually helped me on GU a few times this week. So, okay, do you want to use a new chart for this, or actually let's back test. Let's go all the way to the left so you can leave your markings on there. Let's go all the way to the left and find some previous price action. Yeah. Okay, so let's find a New York session somewhere. Zoom in on a New York session somewhere.
What time frame?
5 minute. Yeah, the 5 minutes. So you're probably gonna have to go more to the right since you got the free account. Yeah. Yeah. So scroll all the way to the right. I don't want to mess up your chart in your previous. Because I'll go all the way to the left somewhere so we can find a New York session. Yeah. And yeah, so just find a New York session, and right. Yeah, just keep going to the left until we can find some, a clean area of price action. Yeah, like right there. Let's just find New York session right there. So I guess you could turn on the indicator, which says sessions, and then it just automatically have it marked up for you. See if that works. It may be too marked. Yeah, it may be too messy. Yeah, take it off. Take it off. That's way too much. Yeah, just take it off. Yeah, just take it off. Okay, so just put a line on. Just put a vertical line or something on in midnight, and midnight on one of those days, and then so just put a midnight where Wednesday went to Thursday, Wednesday to Thursday. Yeah, just put a vertical line so we can. Yeah, just put it right at midnight. Okay. Okay. Now listen. Now, what you're gonna have to do now is drag the chart all the way to the right. So go ahead and maximize the screen. No. I'm saying drag it all the way to the left. Yeah, right there. Now maximize the screen. Remember, we're going to have to drag the candles to the right of the screen so we can't see them. So maximize the screen. Now drag the chart all the way over to the midnight section, to the midnight line. Drag it all the way, right there. Now keep going to the right until we see New York session, and then we're going to mark up the highest high and the lowest low. So just keep scrolling to the left until we see midnight. Until we see 9:30. Yeah. Yeah, just keep going until, and you may want to put your your cursor over there so we can, because I don't want to see any candles to the right. Go to the right, see where we are. Where are we? 7 o'clock?
3 a.m.
Yeah, keep going, because I don't want to see any candles so we can just predict price. I just want to mark up the highest high and the lowest low. You're going to have to put a ray or a trend line. And
it's 5 o'clock. This is
yeah, keep going. I just want to do, then you got to put a new line on 9:30, so you can make that line like white, or I just don't want to see any candles. I just want to see where 9:30 at. What 9:30 at? Is that 9:30 already? Or 7:40? Okay, keep going.
7:40.
Yeah. Right. Yeah, we're gonna see if this shit gonna work on this. Okay, so yeah, keep going and keep going to like 9:20 or something.
9:20.
Okay, so scale the chart so we can see the candles, because we can't really see them. Scale it to the left. Yeah, there you go. All right, so okay, so so you're gonna have to mark up multiple ones. You got to mark up multiple highs and lows, because we have to mark up the highest high and the lowest low. So okay, what time is it? What time is that red candle right there? The 9:20. No, I'm saying the farthest red candle to the right. What time is that?
9:30.
Okay, so yeah, we got to mark up the highest high and the lowest low. Now I know it's going to be challenging. You're going to have to put a trend line on the chart. So just find the highest high and the lowest low. You see, the most recent highest high and the lowest low. I'll show you where it's at. Just put a horizontal line on it since your mouse is tripping. I'll show you where to put it at.
Yeah.
Nah, nope, that's way too high. Like right there. So just put a horizontal line right there. We have to mark up another high as well. Put a horizontal line right there at the top. Yeah, right there. And also we need to mark up, where's the next high at? Where's the next high at? Going towards the bottom. Where's the next highest high?
This one.
Exactly. Mark that one up too. Okay, so now, put it on there. Now I want to make that, put it on the high. I know we use the bodies, but just put it on the wick high for this strategy. Can you make the one at the top a thicker line so it can symbolize the power? So we can know that the one at the top is the highest high, and that, just make it like a thicker line. Yeah, like put it on like a 2. Okay, now go ahead and clone that line and put it at the lowest low at the bottom. Clone that, clone that one and put it at the lowest low. Yeah, drag it down to the lowest low. Yeah, now drag the other one, clone the other one, and drag it down to the next lowest low. Yeah, clone the skinny one. Yeah, now drag it down to the next lowest low. Exactly. Okay, so go one candle at a time. Let's see what's going on now. According to what he said, and you just saw it on NAS 100. On US 30. If it takes the high, we should be able to go short in the opposite direction down to the next low or the next high. Let's see which high it takes. So this is the highest high and the lowest low before 9:30. Let's go one candle at a time to the left. Okay, hold on. Before we do that, what structure do we have? What structure do we have in the market just off the 5-minute chart? What do you see?
Bearish structure.
Yeah, I see a mitigation block. Don't you see a mitigation block on the 5-minute
I
chart?
see.
It's just like two of them. Where do you see the most recent bearish mitigation block at? Remember, it's the M stretch pulled down exactly right there. So remember, price could reverse and go down. It could come up into that block right there and then go down. So, and then we have, where's the next bearish mitigation block at? The next highest up close mitigation block.
Yeah.
Nah, go down one. Go down. Go down, to the left, to the right, to the right, to the right, to the right, to the right. Then go to the left, to the left, to the left, right there. No, go back to right there. That's the mitigation block.
Yeah.
Because remember, that one is reaching down the lowest. So what it's telling us so far is that price could go up, and then we can probably go short inside of this bearish mitigation. You see what I'm saying? I'm not just following the pattern. We're trying to look at structure as well. So this is telling us, even though price may just spike up, we don't know, but we got bearish mitigation blocks right here. So it looked like price may want to try to push it down. So go slowly to the left and let's see what happens. Hold on, what time is that? Don't go, you're going too fast. See, you're going too fast. Go, where's 930 at? Where's 930 at? You got to put a line on 930. So put a vertical line on 930 and make it a different color, like a yellow or white color or something. Holy shit, look like it's working on fucking forex as well. Can you make that like a dotted line or something and make it kind of skinny? Yeah, make it like a dotted line because I don't want all the solid lines to try to make this line more significant. Can you make it like thinner because you got it on a 4? Can you make it like a 2 or a 1 thickness and turn the red up? Make it all the way red. Click on that red you created. Yeah. Okay, cool. Okay, so listen. So hold on. What are we looking for here? Hold on. Go to the right one candle because we got to be looking right at 930 because right there. Okay, so what are we thinking right now? According to what ICT taught, he said you can go short. He said if price takes out a high or a low, you can instantly go short in the opposite direction, right?
Yeah.
Down to where?
The next low.
Okay. Now we do have a low down there. It looks like we have another low right there. But you see that other low right there, which is right before 930? Go down. Put your
this one.
Yeah, I'm thinking that one, but I don't think it's going to revert. I think it may try to reach for the one down at the bottom because it's an order block down there. Yeah. So basically, if price takes that line at the top, what you going to do? Go long or short?
Short.
Okay, so let's see what happened. Go one candle at a time. Okay, hold on. It just took it. So now what are you doing? According to what you just saw and according to what ICT says, you can go long or short right now.
Yeah.
Which one?
Short.
Okay, short. So you're gonna go short down to where?
This low.
Okay, yeah, you could, but also you got consequent. See, that's what I'm saying. We got to mix the structure here. We got consequent encroachment of a wick, right? We got 2 consequent encroachments. So you got 50% of that wick of the candle you're on right now. Because remember, so you can go low right there, or you can go low. Where's the next consequent encroachment at? See that long wick down there?
This?
That long red wick. Yeah, exactly. That's another consequent. No, well, that is one. That is one right there of that long wick right there. But we got one right there as well. But according to the structure, it should take what low though? According to the structure, exactly. According to the structure, price should go lower and take that low out. But so let's keep going to the left, one candle at a time, and see what happens. Okay. So hold on, stop right there. Now, that's why I was telling you that we have to mark up the previous lows. You see what I'm saying? Now, according to the structure, it should have took that low down there, but we did have other lows. That's why I remember I was telling you before 930, I was like, hold on, we got a few other lows that we need to mark up, but price probably will take the low at the bottom. But you see that price reversed off of, it did a rejection block. You know what that is? See, you have to mark up we have to mark up all the lows before 930. Even though the structure, it should take out the low where your mouse is. But we also had a low. Remember, we have the body low, which is under the red candle, right?
Yeah.
So we had two lows under. Where is a low under the red candle? I'm trying to. Do you know what a rejection block is? This is ICT stuff.
This.
No, rejection block is when price don't close below the red candle, it just wicks below. You see how it wicked below on the green candle and then took off?
Yeah.
Do you see now why I tell people to mark their lows up on the body of the candle? Remember, I say mark up the body of the candle, but based on what you just saw on US 30, price was taking out the wick lows. But I think we need to mark up all lows before 9:30 and see what price does. So you see price wick below that red candle and then took off. That's a rejection block. You see what I'm saying? It didn't take the wick low. Where's the wick low I'm talking about?
This low.
No, that low. Yeah, exactly. That one right there. See, it didn't see. That's why I ask people to mark up the body low and not the wick low, because it did a rejection block. Mark, put your mouse on the wick low. I mean the close low of that candle. Now look to the right. You see what the green candle did? It wicked below it and took off. That's a rejection block.
Yeah.
That's why people should mark up the low of the candles versus the wicks. Okay, so let's do it over. Let's do it over real quick. Drag the chart back to the right, and let's mark up the body lows. So go ahead and get a. Okay, now go ahead and get a vertical line and put it on the body low, the two body lows that you see before 9:30. Yeah, put it right there, and then mark up the other one as well. You could just put a vertical. A horizontal line on there, and then you'll delete it when we're done, just so you don't have to just put a vertical line on there. Just so you don't have to move it around. You just put another vertical line on there. Yeah. And then, make that one. Can you put it on a 1 to make it to symbolize the importance of it? Because remember, the thick line is the highest high and the lowest low. So the ones in the middle, we want to make Okay, now clone that and put it on the next close low before 9:30 that you see. Go drag the chart to the left. No, drag the chart to the left. Drag it to the left. Because we have another one that's higher than that. Keep dragging go to the left. Yeah, keep going to the left, one candle at a time. To the left. Because we have another body low we need to mark up. Keep going until we see the 9:30 line. Keep going.
9:30?
Yeah, keep going. No, we don't see the 9:30 line yet. Right there. Stop. Now what other low red candle low you need to mark up?
This.
Exactly. So now if price takes that blue line above at the top right there, then we can go short down to where? Those two lines right there. Yeah. Now remember, price may go, hold on, because remember, we know what price is going to do, but let's just talk like we don't know what the price action is. Now remember, price may go all the way down to what wick low, according to what you just saw. Right, it may go all the way down there, but remember, we can't forget about the body lows of the red candle. So let's go to the right, one candle at a time, and see what price did. So you just keep going to the left. Okay, so it took out the wick at the top. So now we can instantly go short. So we put on like 3 positions. Where's our first TP at?
Yeah.
Exactly. So keep going to the left and let's see what happens. Okay, 1 position gone. We got 2 left. Now what are we doing? Where's our next TP at? Price may not make it down there, but if it does, if it hit that line, we out right there. Okay, let's see what happens. Boom, right there. So we out now. Now we got 1 more position on.
Yeah.
Now remember, we don't know what the candles are doing to the right, even though we already know. So we believe that price is going to take out that wick low, right? Yeah. Down at the bottom, right? Or it may go to consequent encroachment of that wick, right?
Yeah, it does.
Okay, but let's see what the next candle does. Remember, we going short. We think it's going short, but let's see what the next candle does. Okay, right there, I'm out. If I see something like that, I'm out. Now, worst case, if you would have got out at that next candle, you just would have broke? Actually, you would have made a little bit of money. You actually wouldn't have broke even if you got out at the close of that candle right there. You see that? Remember, because we put on 3 positions and we still got 1 left. Because remember, we were holding for the wick low down there, but we see price reversing on us, and that just goes to show you that you need to mark up the body lows.
Yeah.
Definitely. Okay, cool. So we see, but you see that the first high that price takes out at 9:30, you can reverse in the opposite direction, and then take liquidity at the candle lows or the wick lows, right? You just saw that.
Yeah.
All right, so let's delete all these lines and let's go to the next day to the right. Yeah, let's delete all these lines and let's do the same thing for the next day. That's just pretty cool. I mean, it looked like it's working. I mean, the first high that get taken out, you can go in the opposite direction, down to a low or a high. Okay, so now what we need to do is we need to keep that 930 line. We're gonna put that 930 line on the next day. So just drag that 930 line over to the next day. Yeah. So where's midnight at? I guess you can. Yeah. That's midnight.
Yeah, that's midnight.
Okay, so let's go ahead and go slowly to the left until we find 930 because I don't want to see any candles to the right except the line of 930 so we can predict price. So just keep going slowly to the left until we hit 930. I just want the line to be exactly on 930. I don't want to see any candles to the right so we don't cheat ourselves. Because when the market open, we need to act like it's actually printing right now. And what will we do? Did you go too far? You went too far to the right? What are you doing? What are you doing? We trying to find 930.
No, this is not midnight. This is midday.
Yeah, put that on midnight of the so I mean right when Friday hit. So yeah, just keep scrolling to the right. So put one line at midnight and put the other line at 930. Oh, yeah, appreciate it, man. Yeah, man, appreciate it. Yeah, I got approved for it. Yeah. Yeah, I'll probably pick it up like Tuesday afternoon. Appreciate it, man. Yeah. Somebody else in the group moved into like a new apartment, so they were staying with their grandmother. So stuff is working. But anyway, okay. So we need to put a line on midnight and a line on 930. We don't want to see any candles to the right of 930. Okay, right there. So let's not even cheat ourselves. Just put the line at 930 and let's see what's up. Boom. Okay, so what do we have? Can you scale it up to make the candles look like pencils a little bit? Go to the scale to the right, to the left of your chart and scale it up a little bit. Yeah. And can you move the chart up so we can see the candles? Yeah, see now you went to the right. We already know what price is doing now. Okay, so go ahead and put your vertical lines on the highest high and the lowest low. So we need the highest high to have the thickest line and the lowest low to have a smaller line. So just go ahead and do that again. So yeah, that'd be your lowest low. That's gonna be no. Just put a vertical line on there because remember you don't have to do all that since you don't have your mouse. Just put a vertical. Put a horizontal line on there, and then when we're done, just delete it again. Yeah, so we don't have to go through the time of you trying to make the line all straight and all that. Now remember that line needs to be thicker than the. Make that line. Yeah, that's your lowest low. All right, so now we need to put that. We need to put another line on the wick low up the top up there. Yeah, right there. Yeah, put it on that wick. Put it on the wick low. No, drag it up to the wick low. You see the lowest low before 930 up there, right there. Now, truth be told, you probably need to put it on. I mean, you could put it on the wicks, but you probably want to put it on the body of the candle as well because. Yeah. Okay. So that's the highest. That's the second highest high, and then we got the highest high, which is the high above that. So clone it and then make the other line thicker. Drag, yeah, exactly, right there. Make that line a little thicker so we can know that that's the highest high before 930. Okay. Okay, cool. All right, so what are you looking for right now? Now remember, we don't know if price is going to do the exact same thing it did yesterday and all the other times I showed you on US 30. But according to what he said in the structure, if price takes that low or that high, that means you can go long or short in the opposite direction down to the exact area of liquidity, right?
Yeah.
Okay, so we don't know if price is going to take the high or the low, but if it takes the high or low, what we're going to do? We're going to go long or short in the opposite direction, right? Mm-hmm. Okay, let's see what happens. Let's go one candle to the left, one at a time. Let's see what's going on here. Boom, right there. Okay. Okay, actually go back to where we see the 930 line. We need to look at the structure. I forgot to look at the structure. So Yeah, go back to the 930 line. Okay, so what do we have here? Okay, what do we have here? We have, let me see. What do we have here? So we have a mitigation block. You see that right there? What do you see the mitigation block at? Go to the right. That huge red candle. Go to the right, go to the right, to the left, to the left, to the left, right there. Remember, the mitigation block is when it makes a higher low. And the last down close candle between the high and the higher low, that's the mitigation block. Remember, it's a stretched M. So just imagine an M and then a fat person got on it and drug it down. So basically what you're seeing right now is that's a mitigation block. So that's going to push price down or push it up.
Push it down.
Yeah. So you don't necessarily have to draw it out. You could draw it with your eyes. But if you had if price comes up into that zone, it probably wants to reverse. So this is it. So if price does reverse, then this kind of makes sense because it came up to a mitigation block.
Yeah.
Actually, we got a double mitigation block. Go to the left. We got another one as well. What do you? Go to the left. I'll show you one candle at a time. Go to the left. To the left. To the left. To the left. You're going to the right. Yeah. Go to the left. 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 Right. Go to the right. 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 Right there. Go to the left. You're going too fast. Go to the left. 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 To the right there. That's a mitigation block too. Remember, that's the lowest down close candle before it made a high and then it made a higher low. You see that? That's the last down close candle. Actually, it wouldn't be that one. It would go to the right. It would be the other one. Go to the right. Go to the right, 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 to the right. Right there. That one. That red candle. Because remember, it's closed lower than the other one. So that would actually be the mitigation block. So we got a double mitigation block. So basically what I'm trying to say is that if price comes up and takes one of these highs, it would make sense for it to reverse and go lower. But again, we don't know that. So let's see if it's going to work again. Let's go to the left one candle and see what high price want to take. Go to the left one candle at a time. Okay. So now what are we thinking? Maybe we can go short because price may continue to keep going higher. So right now we should be looking for shorts down to where? Down to where?
To this low.
Point to it. Exactly. Or it may go down to where? That go higher. It may go down to where? Go up. Go up. See the low up under the green candle, the huge green candle, and that after 930. Yeah, it may do a rejection block. So that's something you got to be. You can either mark it up now, or you can just keep it in mind. Because remember, it may do. We just saw it did a rejection block, meaning that the price wicks below that, below grabs the liquidity and takes off. So right here, we should be going short, or we could be looking to go short. According to the way he teaches this, it may not work every single day, but you've seen it work three days in a row on US 30. Yeah. So are we going short right here, or you want to wait to see what the next candle does?
We'll wait.
Wait, okay. Yeah, I would wait too because it's a huge green candle. So it may want to take out that next high up there. And then, because remember, go to the left. We got an order block. Where's the order block at? Go to the left. No, yeah, go to the left. What do you see the highest up? So listen, we're on a 5-minute chart, so we can't necessarily tell exactly what the order block is, but somewhere it's a bearish order block up there that's going to push price back down, right?
Yeah. Yeah,
so it has to be like somewhere in that zone right there. So it kind of makes sense that price will probably continue to go higher and then push back down. So let's go to the left and see what happened. We're gonna wait after that green candle. Okay, hold on. Okay. Stop right there. Yeah, see, because when I seen that huge green candle right there, I'm like, I probably wouldn't go short right there. I probably would wait until it took out the next high. And now it looked like price came up into a bearish order block on a 5-minute chart. Somewhere it's a bearish order block in there, even though we're on a 5-minute chart and there's too many candles for us to really see unless we went on a higher time frame. So remember, ideally you would have the 5-minute up, the 15-minute, and the 1 hour up. So you really be able to see the structure a lot more clearly. So what are we doing right now? What do you think we should do right now? Go short? Or you think it's probably going to go higher? Because remember, we got relative equal highs up there as well.
Yeah, exactly.
Yeah, so it looked like price may want to go higher and take it. So, yeah. Okay, let's keep going to the left. I'm probably just going to wait to go short, even if it looks like it may want to go higher. And nope, boom, right there. Hold on, let's see what happens. Keep going. hold on, right there. What are you thinking now? Yeah, see, go back to the left. I was thinking that we probably should go short though. That's exactly what I was thinking, even though I want to wait. But be honest with you, what I would have done, because remember I said I was going to wait for price to go higher, right? Hold on, stop right there. Go back to the right. I'm gonna show you where I would have went short at. Go back to the right. Now remember, right there, I would have been waiting right there. When I seen that engulfing candle, I'd be like, "Fuck that! I'm going short. I'm not about to miss this shit." So now we going short down to where? We put on three. We put on three TPs. Where are you getting out at? Where's the first TP? Nope.
Yeah.
Exactly. You're gonna get out right there because remember it could do a rejection block like you just saw, right? Price could wick below that candle and then take off. Now, so that's gonna be our first TP. Can you put a blue line right there, right up under that green candle? Yeah, just clone it. Holy shit! Look like this shit working, dude. Okay, so now let's go ahead and drag that line from the wick up to the body high. See the wick down there? Your next low. See your next low down there?
Which low?
The next one. Yeah, drag it up to the body because we may do a rejection block and take off on us. Exactly. Okay, so that's going to be the first TP is that first blue line. The second TP is going to be that line. Where's the third one at? Where are you going to hold for? Okay. Yeah. Okay. Cool. So let's go ahead and go slowly to the left and see and we put on three positions right there because we got an engulfing candle. So now we're going short. We're not about to miss this move. Okay. Boom. So we out of our position right there. We out. Even though it didn't take the low exactly. See, it kind of did a rejection block. You see what the fuck I'm talking about?
Yeah.
If you zoom in to the low of that red candle and the low of that green candle, I promise you it went below. It wicked below it slightly and took off. That's what I'm trying to tell you. We need to get out of these fucking body lows, not the wick lows. Even though you saw on US 30, I just showed you that it did take the wick low. But to be honest with you, if I've got real money on the line, I'm getting out at the body low. I don't give a damn how much lower or higher it go. I'm not going to really hold out for the wick unless my back testing told me that. Okay, so now what are we doing? Remember, we got out at one position. We still got two positions on. Now we giving money back to the market. So we holding or what you thinking? Hold on. Delete that line right there where price took that low. We don't need that line on anymore because price took the low already. Yeah. So we still got two positions on. We put three. Okay. So now what are we doing? Price is pushing up. So we holding our short or because remember if we know price has to go lower, if price is going up, then we're gonna put in more shorts. See what I'm saying? So what are you thinking right now? Just still hold the shorts or should we just take something off?
Take something off.
Okay, so go ahead. Okay, so yeah, so now you didn't sold one of your other short positions. Since you want to take something off, you didn't make as much because remember you waited till price pushed up. So now you still got one short on. So I'm gonna go ahead and hold for that next low. But if price goes up above 50% of that range right there, I'll probably just get out and and break even. So let's go to the left. I'm still gonna hold for that short down, that low down there. Boom. Right there. Boom. You see that?
Yeah.
Yeah. I see. With prices going up like that, that's why we have to know what price is going. Because think about it. If price pushes up right there, what am I talking about? Where's the big green candle at?
This.
Exactly. If price pushes up like that, dude, that's a blessing from God because that's giving you. Remember, if you know price had to take out that low, you see that? Which low am I talking about?
This low.
Think about it. If you knew price had to take out that low and you see price pushing up, you're like, oh shit, this is a blessing because what are you going to do? What should you be doing as price is pushing up?
To enter
You going shorts because remember when price reverses, you're going to be instantly in profit. This is what ICT talk about. He said we should be selling when up close. We should be selling when price is going up, and we should be buying when price is going down. Like I don't know if you ever tried it, dude, but you instantly be in profit. This is a great feeling. But you have to know that price is going to take out that low. Go ahead and delete that line right there. That price just took. Okay, so now the greed is going to come in. Now remember, price just took out that low, and let's just say we got on another. Let's say we didn't sell that position, and we held it. So now you got one more position on. So what are you doing now? So this is where the greed is going to come in at, because you could you could sell all your positions now, or you could still hold for what you could hold for that next low, right?
Yeah.
I mean, it probably will go down there, but me personally, I probably just be like, fuck it, I'm out. Like, I ain't about to give no money back to the market. I don't know if it's going to push up, but let's just see. It probably will take that low because this is GU and it is a great bear structure going on. So let's go to the left and see what happens. It probably will take that low. Okay, cool. Boom. So look, it took the highest high and it took the lowest low before 9:30. Now remember, the first high that it takes, it did what? We could have went short inside of that candle, right?
Yeah.
Okay, so we seen it happen 2 days in a row, right?
Mm-hmm.
Okay, well, let's see what the next day does. Let's go ahead and delete these lines and let's drag over the midnight line and the 9:30 line. Let's see what the next day can give us. So you're starting to see that at 9:30, you can go short or long whichever it breaks out first, right?
Yeah.
I think this works on all days except probably news, because news. Remember, ICT said the algorithm don't work with news. Like it's manual intervention that happens. So yeah, the market makers, they step in and change all the rules. So, but man, with that news, man, like if you got some money that you're willing to just gamble on, if it go in the direction you want, shit. Because that motherfucker can go 2,500 points in 5 minutes on US 30. Crazy. 2,500 points in 5 minutes. And you catch the right direction, Lamborghinis and all that is
500 points.
I done seen US 30 go 2,500 points in 5 minutes.
Oh.
NFP and all that. I was like, I never traded it, but because see, the way I do it is I let price push all the way up and push all the way down, and then I trade the retracement. That's how you're supposed to trade that shit. Let it push at 9:30, 10:30, and go all the way up, all the way down. And what happens is price is going to reverse, and it's going to basically retrace that whole candle. So it's like that's a guaranteed move if you just wait for price to make the highest high or the lowest low, and then it's going to retrace the opposite way the whole time. So that's
yeah, that's true. It happened in GU.
Okay, so that line is on midnight. Okay, yeah, so we're going to find 9:30, put the line exactly on 9:30. Don't move the chart to the right at all. And then let's go ahead and look at the structure. You're going to have to pull the chart up a little. And then we're going to look at the structure, see what ICT stuff we can find. And then, because this is a pattern that we're looking at, but we have to depend on more than just a pattern. We have to look at the structure itself. So, okay, so where's 9:30 at? Yeah, we went a little bit too far because now we seen what the price action is doing now. So let's go one candle at a time and then put it right at 9:30. Okay, boom. Okay, so yeah, put that on there. And then let's look at the structure and then let's mark up the highs and the lows. Okay, so can you drag the chart down so we can see just drag it all the way down? And remember, don't move it to the right. Just drag it where we only can see that 9:30 candle. Okay, yeah. Can you scale it a little bit so we can see that? I only see market structure with the candles being. No. Yeah, make it look like pencils. Yeah, scale it to the right. Scale it to the right. Yeah, and drag it down a little bit. Okay, cool. So what do we have right here? What do we have? Let's see. We got okay, we got relative equal highs. Well, not really. It was relative equal highs, and then that candle took that high. Yeah. We got a breaker in a way. Well, no, we got a breaker. We got a bearish breaker. Where is it?
Bearish breaker.
Remember, it's the highest high. We got a higher high, and then we got a lowest down close candle. Nope, that is a breaker, but it's caught up in price action. Where's the next breaker? Yeah. That's not a breaker. That's a mitigation block, actually, which you just pointed to. Where's the breaker at?
Oh,
drag the candles all the way to the right. You may be able to see it better. So go down. Hold on. Nope. Go down to the scales and drag it all the way to the right. Go down to the scales at the bottom and drag it to the right. Yeah, use the scale. Yeah, drag it to the right. Drag it to the right. To the right. To the right.
Right.
Yeah, keep going. Where's the breaker at? See how you can see the price action better? Where's the breaker at? Where's the bearish breaker at? Just point to it. Remember, it's the higher high, and the bearish breaker is the last down close candle. Now you can see the breaker better with this. It's not either of those that you pointed at. Where's the bearish breaker at?
Recently, because this is the only one I see.
Exactly. Exactly. You're
Yes,
right. Hold on. Where's the high at? Where's the high that took all the other highs? Exactly.
this.
The lowest down closed candle. That's the breaker. Now, yeah, that's the breaker. So now scale it back to the right. That's what I'm saying. You have to scale the chart to the left so you make it look like pencil so you can see the price action better. Now go ahead and I mean, I guess you put like a different color around that candle. Put a vertical, put a horizontal line on the high and the low of that candle, and then make it like yellow or something so we can know it's the breaker. So yeah, put it on a very high and a very low, so you don't have to like mark it up. Nope. Put it on the breaker candle. Exactly, right there, and then put one at the bottom, and then make it like a yellow or a white or something, just so we can know it's the breaker. Exactly, and make the top the same color. Because remember, we're gonna use that line for the highest high and the high and the lowest low before 9:30. Okay, cool. Can you clone that line and then we're gonna put it? We're gonna find the highest high and the lowest low before 9:30, and then we're gonna change it back to blue. Since that's our lines. Hold on, is that line on one? Is that thickness on one or a two? The thickness.
So
Yeah, put it on one. Okay, cool. All right, so make it back blue because that's what we used before. Make it back blue. Uh, click back on the blue you had before because it was like a lighter blue than that. Double click on the line. It was like a lighter blue. Yeah, right there. Okay, cool. Okay, so now we need to find the highest high and the lowest low before 9:30. So what do you see? Okay, yeah. Okay. Make that line thick. Make it like a 2 or 3. All right. And okay, right there. Now you may have to scale the chart all the way to the left because there may be another low that we don't see. So use the scales and scale it all the way to scale it to all the way the other way so we can see price action. Because we may have a low that we can't see. Yeah, exactly. Keep going. Uh, okay, well we don't see anything. It might be one, but I don't want to move the chart at all. It might be one to the left, but for right now, just mark up the most recent low you see, which is that low right at 9:30, right before 9:30. Okay, so scale the chart back to the left so we can make them look fatter. Yeah. Okay, so put that line right at the wick low down there. Because remember, the 9:30 candle hasn't happened yet, even though we got it on there. So scale it up, drag it up to that green candle low right there. Okay, so that's the lowest low, and we got the highest high. Now we need to mark up the intermediary highs. So now you got to put that green line, that blue line, put it on the wick, put it on the top of the green candles, and make it a 1 because you got it on a 2. Make it a 1. Exactly. Now make it a 1. Hold on. Yeah, make the thickness a 1. Now clone it and put it on the next one. Exactly. Put on the next. Exactly. Right there. Boom. Yep. And put on the next one. Yeah. Okay. Yeah, because we really don't know what high it's going to. Remember, it could do a rejection block and go in the opposite direction. Now this looks a little tricky. That's why back testing is so important. This looks a little tricky. Now we do have a exactly. Now what I think we need to do is can you clone that? Can you clone that yellow line and put it on that breaker down there? I mean that mitigation block. It is a mitigation block nonetheless, even though it's so close. Clone the yellow lines and put it on a mitigation block. See if you can find it. Clone it because that's a breaker. Yeah, put it on a mitigation block. Exactly. Now clone it and put it at the top of that wick. Just so we can know, like if price comes back up, that candle should push price back down. So remember that this block right here may stop us from getting to those blue lines that we just drew because it's a mitigation block. Yeah, this is kind of tricky. I probably wouldn't have traded this day because the lows are way too high to 9:30. I mean, because remember, like 9:30, it literally took that low right there. So that means that we could go long in the opposite direction according to what ICT says, right?
yeah,
So that
and there's liquidity here. I
yeah,
see here.
we would have to see like a strong green candle or something to break that mitigation block right there. Uh,
It's
okay,
coming up here.
yeah, that's a breaker right there. But I'm saying, according to the way ICT teach it, we should be able to go long right there because remember, price wick below that low right there, right at 9:30, right?
Yeah,
So what do you think is going to happen on the next candle? What do you want to do? You want to go long or you want to wait?
I wait for these highs to be broken.
And then you'll go long after that?
After these highs Yes. If a
Okay.
candle close
Okay. So
above this,
what I'm going to do is I'm going to go long right now, and then I'm just going to put a stop loss right below the wick right there. And if I get stopped out, so be it. Because I mean, we've been seeing that the first low that price takes out before the lowest low and the highest high, that price could go a little bit lower and then take off going higher. Now hold on, we also got to look at the structure. Price just took a low, right?
yeah,
So now it just took sell side liquidity. So now if the way the algorithm works is looking for buy side liquidity now, right?
yeah, that's it.
Yeah. So it kind of makes sense that price would go higher. Um, But you're right. If price, to be honest with you, if we see a green candle close below that highest up close green candle right there, the structure has changed. So I'm gonna go ahead and go long right now, and then but you're not wrong though. Like you said, if price closes above that green candle right there, you're not wrong. But I'm just gonna go ahead and go short right now, and and I may put a
Long or short.
yeah, I probably put a stop loss below that wick, or I may not even put a stop loss on right now. But if I see like another huge red candle, then I'll probably just get out the trade and and then I'll get back in if price closes above that green candle. What green candle I'm talking about? What green
Come
can
again?
what green candle am I talking about? If price closes above it, that it's going to break structure. Exactly that one. Exactly.
Yes.
So you're not wrong in what you're saying. So let's go to the left and see what happened. I'm long right now since price took that low. I'm long. Okay. I'm still long.
Yeah.
I have no stop loss on. If I seen another
Yes.
huge red candle, I just would have took the loss and waited for price to close above the green candle. So I'm still in the trade right now, even though that candle is weak right there. It is a long wick, so it shows rejection. But let's see what the next candle did.
And now go long.
Boom.
Boom.
Okay, so I took a chance a little bit. I'm in more profit than you, but now you waited. You did it the better way. You waited for structure to change. Now structure has changed because it closed above that wick, right? I mean, above that candle, right?
Yeah.
Exactly. So now let's say you got on three positions right there. Where are you getting out at? Where are your take profit areas?
This next high.
Okay, and then
This next high. This next
okay,
high.
but according to the structure, price should go where? It should
Yeah.
exactly. Now remember, you also have another thing you have to do is look at 50% of the range. Remember, price may reverse off of 50% of the range. So go ahead and mark up the range. What range am I talking about?
This range. This move
Exactly. So where's 50% at? Can you get like a measuring tool?
should be here.
Get the measuring tool. Get the Fibonacci and pull it out. Yeah, get the Fibonacci and pull it out. Exactly. Now, yeah, exactly. So just remember that price could reverse off of 50% and go lower. That don't even look like it's 50%, even though it is. Isn't that crazy? Like with my eyes, it don't look like it's 50%, but it is.
Yeah.
So we could see a reaction off of that area, and it makes sense because remember, price is coming up into a bearish mitigation block, right?
Yeah.
So that's why I'm saying we should. I even told you. I said we should see huge green candles because price has to break that bearish mitigation block. It has to do it with huge candles. But yeah, I'm probably going to put three positions on, and I'm probably going to get out at. I'm probably going to get out early with two positions. I'm probably going to hold for the high up there. That's what I'm going to do. So
Yes.
yeah, I'm going. My last position, I'm going to hold for that one. But the two positions, I'm going to get out at the first two green levels.
I'm thinking this mitigation block would.
Yeah, and hold on, it has a gap right there too. You see that gap right there?
Yeah.
Yeah, exactly. So I probably should hold one of my longs for right there because price maybe want to go up and fill in that gap. I'm just trying to get out before we see a reversal. We know that price probably has to take out that high up there, but I don't want to be in drawdown. Me personally, I just don't like being in drawdown. So I got three positions on. I'm going to take two off at the first two green areas, which is probably going to be way too early, but whatever. But I'm going to hold one position for the high up there. So what you going to do?
Yeah, I'll wait till this mitigation block gets here.
Okay, so let's go to the left and see what happens. Oh shit! Damn! What the hell? Oh man, yeah, I wish you would have got stopped out. Yeah, keep going. Keep going to see if, yeah, it eventually went up there, I suppose. Nope. Damn. But you see that mitigation block pushed it back down. Let's go back to the left. Yeah, it didn't do
That's
it. You see what I'm talking
that's why
about? That's
ICT
why I was
he
saying
said
like
it.
that mitigation block. That's what I was saying. But it closed above that candle.
He
Damn,
said he
that's some
does not trade
bullshit.
forex because of man.
But you see,
ICT does not trade
but
forex.
you see why I said we need to mark up that mitigation block because
Yeah,
actually, what we probably should have did, we probably shouldn't have went long until price. We seen a green candle close above that mitigation block. You see how no green candle closed above it. You see that no green candle closed above the yellow line,
yeah.
and we see those wicks right there. That should have told us like, well, shit. I probably would have just took a loss on that one. But I probably should have waited instead of waiting for price to close above the green candle.
It was Monday, so Mondays there's always manipulation in the forex market. Monday.
Yeah, but that's why I keep saying we need to mark up the structure itself. That's why I was like, we need to mark up that mitigation block, but we see no green candle close above it. You see that?
Yeah, yeah.
So next time we need to wait until price closes above the mitigation block and then get in long. Um, let's see. Hold on real quick. Actually, go back to 930. Go back to 930. We actually did have a move here. Now listen, we actually did have a move here because look, okay, if we would have went long right at that wick, right when price took that low, what was the next? Hold on, what was the next highest high after that? We actually did have a move right here.
Yes.
Okay, and where's the next one at the next lowest high on the body? Put it on the body. We had that. Hold on, we had that high right there, and then we had another high. Where's the next high at?
Yes.
Exactly, body. So we actually did have a move set up. So go to the right slowly and let's see. Go to the left slowly. Boom, right there. We would have had a position that would have got us out. See why I say get out at the body highs? We have to mark up the body highs too, especially on the 5-minute chart. And then keep going to the right and let's see the price go above the next high. Boom, right there.
Yeah.
It did a rejection block. Go to the candle to the right. Exactly. I mean, don't take my word for it. You see the shit happening. That's why I keep telling people to mark up. You have to look at the close. You see price is not taking out the wicks. Well, it may just be on GU because it was working on US 30, but still, it did a rejection block. So we actually did have a trade. You know, we did have two trades right there. We could have got in on two positions. Now, remember, we would have been in a little bit of drawdown if we went short because price kept going down, but it closed on a wick, green wick right there. And then we could have got out at the closed body candles right there and been out. And then seeing price reverse on us and be like, well, I'm glad I didn't hold for price going higher because it couldn't close above the mitigation block. So let's go ahead and delete these lines and let's keep going to the right. So this is some good shit right here. I mean, you seeing for yourself that you should put you should get out this body highs, right?
Yeah.
Yeah. I mean, this is a rejection block when price wicks above the candle graphs. So that's why I keep telling people, I'm like, the liquidity is not just above the wicks. You have liquidity above the candle high itself. You see that?
Yeah, that's true.
Yeah, I mean, it does the rejection blocks and take off, and motherfuckers be like, damn, what happened? This stuff don't work. No, you don't know shit about ICT rejection blocks. That's what it is. Price will wick above that closed body and turn around on your ass. You know what I'm saying? You be like, damn, what happened? I thought I was supposed to take out the wick. I'm not holding for no wick, man. I mean, I didn't see shit take off way too many times. All right, so that's midnight. That's midnight, right?
Yeah, that's midnight.
Okay, let's just do it where we can't see no candles to the right because this helps with the back testing. This is how back testing should be done. You shouldn't see no candles to the right. You should be able to predict what's going to happen and go one candle at a time and get your learning lesson on. Okay, so where's 930 at? Okay, 810. Yeah, let's keep going. Look like we're coming up into some previous price action that you marked up before. So you may want to delete that line. I don't know what line that is. It's from some stuff you marked up previously. Okay, 930, boom, right there. Can you delete that green line? I mean, I don't know what it is, but.
Yeah.
Okay, yeah. All right, so All right, so cool. So let's look at the structure first. So what do we have here? Now remember, can you drag the candles all the way to the right with the scale so we can see the structure more? Yeah, drag it all the way to the right. Yeah, so we can see what the structure is. Okay, so look like we got a balanced price range. Okay, so I see a mitigation block. Do you see it? I see a
Mitigation?
bearish mitigation block that's been holding price down. You see how price is? Where is it?
Yeah.
Nope. It's right there. Exactly. Right there. That last down. You see how look to the right. You see how that candle has been holding price down literally?
Yeah.
Look to the right. You see that? It can't even get above that candle. So we need to put we need to mark that candle up as a mitigation block. Also, hold on. Go to the left right there. You see that bearish breaker as well? Let me show you. Go to where's your mouse at? Where's your mouse at? I can't see it. Yeah. Nope. That is a breaker in a way, but where's the real breaker at? Keep going to the left.
Yeah.
I mean that is a breaker. That is a breaker, but go lower. Go lower. No, go to the left. 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 To the left. To the left. To the left. Right there. Now look, you got a bearish breaker on top of what? A bearish mitigation block. That is a breaker right there. That's the lowest last down close candle that took out what high? You see that high to the left up there? Exactly. Now point to the high that took it out. The highest high that took that out. Exactly. So I'm not saying that that's not a breaker below, but that's like the real breaker, the lowest low down there. But what I'm trying to show you is that you see how the bearish breaker is on top of the bearish mitigation block?
Yeah.
That's why it's fucking holding price down. You see that?
Yeah.
You got a breaker. You got a breaker on top of the mitigation block. Okay, so I think we need to mark this up. So whichever is the lowest down close, we need to mark up. So can you scale to the right a little bit and see which one is the lowest down close candle? Either the breaker or the mitigation block. One of them is, okay, hold on. Which one is lower? Can you put so that the mitigation block is lower. So we're going to have to scale up and put a white line on the top and the bottom of that candle. Yeah, that's a clean ass break mitigation block right there. Yeah, clone it and then we'll make it yellow. Oh, thanks. So I gotta stop saying. Okay, so what else do we have here? Let's see. We got a mitigation block. We can't really see a bullish. Now remember, ideally we would have the 1 hour chart up and the 15-minute chart, but okay. So now what we need to do is mark up the highest high and the lowest low before 9:30. So we need to see the chart. Can you scale it? Can we see yeah, exactly. So we need to mark up the highest high and the lowest low, and then the intermediary highs and intermediary lows before 9:30. Hold on, but do you see that these moves is that we can go long or short when the first liquidity area is taken out? You've seen that you've seen that in 3 days in a row. We can go long or short in the opposite direction that the price take out liquidity the first time. And we need to mark up the body lows or the body highs because price gave us two positions on yesterday before it reversed on our ass. So we can't be too greedy. We gotta find some quick areas and just get out. Okay, so that's the highest high. You can put it on. If I could put it on the, I guess GU may be a little different. We may have to put it on the body highs. Nope. What you doing? We got to put it on the highest high and the most recent highest high and the most recent lowest low. Okay, so that's the high right there. Okay, so now you got to put on the low, the most recent lowest low. I mean, yeah, that's one of them, but you would make that line thicker, right? Because that's the lowest low. You would make that line thicker, so make it like a 2, and then you got another low you got to mark up. Actually, you got multiple lows. Actually, that's the wick low, and then the other lows, go ahead and put it on the body. Go ahead and clone that line and make it a 1, because remember, it's not as important as the line, because that's the lowest low. We go always make that line thicker. Now let's go ahead and mark up the red candle lows. Put it on the lows, not the wick low. Exactly, and mark up all of them. So we got 3 more we got to mark up. 2 more. Yeah, so that one. And I guess that's probably way too close. So I guess that the other one is pretty good because look, it matches that low matches up with a wick low. So that's a good area. So those are good areas to go ahead and mark up the highs. So we got a closed candle green high. We definitely got to mark up. Where is it? So we got to mark up the highest high, make that line bold, and then we got to. Nope. Where's the most recent highest high? Nope. The most recent. Yeah, it's one of those lines. You can either put it on the wick. Yeah, and then make it a 2, and then we're gonna clone that line and make it a 1, and then we're gonna put it on the green candle, the most recent green candle. Yeah, clone that, and put it on the most recent green candle high. Where is it? Right there. Go down. The most recent green candle high. Go down right there. Where is it? What candle am I talking about? Point to it. Exactly. Now go ahead and put it on the next highest up close green candle because you got one more. Man, we trying to get in and get out. We just trying to make this shit consistent. Exactly. Right at the top up there. Right there. Boom. Okay, cool. Okay. This is purge theory right here. Okay, so now what are we thinking now? So let's see, price. Okay, so let's see. Price took out sell side. You see that? You see what price did last time?
Yeah.
Right. So price took out sell side last time. So what do you think it's probably trying to do now?
Buy side.
Exactly. So the last thing that was taken out was sell side.
Yeah.
So that don't mean it's going to take out buy side, but we do have some equal highs up there. We got a double. We basically got a double top up there. But yeah, I think it looked like we're going to be able to go long up into one of those liquidity areas at the top, one of those blue lines. That's what I'm assuming. So, but let's just see what area price takes out first. Okay, hold on real quick. Now I just took out a low. It just took out a low at 935. Boom. You see that? Mm-hmm. We could have. So basically, according to the structure, we should have went long right there, right?
Yeah.
Because it did a rejection block. You see that? Go back one candle. Go back one candle to the left. Yeah, exactly. Right. Go over one. Now when you see the replay, I'm zoomed all the way in, so you can see this. I'm zoomed all the way in. So, okay. So that little candle right there. Let me use my mouse. The little candle right there. You see that rejection block? See how it went below? Yeah. Now I know price went a little bit lower on the next. Go to the next candle. So hold on. We going long or short right here?
Long.
Okay. So if we go long, where's our first destination at? Okay, but hold on. We got another low. We got another high we need to mark up, don't we? Yes. Exactly. Because remember, we trying to just hurry up and get something because that bad boy can do what it did yesterday. So let's go ahead and mark it up. We're going to always got to put on multiple positions. You just can't put on one big position. We got to put multiple positions on. Okay, so boom. Okay, so I got 3 positions. I'm going to go ahead and go long right there. I'm going to experience a little bit of drawdown. But I'm just going to follow what the pattern says. The first liquidity area that it takes out, we should go long or short in the opposite direction. So go to the next candle. So we already long. We're already long. So now we already had one position taken out. So now we got 2 positions left, right?
Yeah, 2.
Okay, so where do you think we should get out at on these next 2 positions? Hold on, that's being greedy. Because remember, price may not make it up there, even though according to the algorithm, like I don't know if you understand purge theory, but according to the algorithm, it's due to take out those highs based on my research. But not being greedy, where should we get out at? The next 2 highs, where at?
Yeah.
Exactly. That's where we should get out at. But most likely, price is going to take that blue dotted line, that blue thickness up there. But let's just see what happens. Yeah, keep going to the left. Uh-oh. Boom. Boom. What I say?
Yeah.
Now see, now we were in a little bit of drawdown because price came back below. That's why we have to wait to see where these candles close. See, yeah, that's why. That's why. Remember, you pointed to that high up there with the thick blue line.
Yeah.
What did I just say? I was like, no, we have to can't be greedy. We have to get in where we fit in with this shit. You know. So if you would have followed my lead, we would have been out of our trades already. And don't give a damn what price is doing right now. We would have had 3 positions on. All of them would have been in profit. Now we would have had a little bit of drawdown after that first position, right?
Yeah.
It would have started to look like we're wrong. But if you take a look at the structure, what did that lowest red candle do? Where's the lowest red candle at? Right there. No, I'm talking about at the 930. Now what did it do? Look to the left. What did it do? I've been saying the word. I said the word like 15 times already. It's the ICT term.
Rejection block.
Exactly. So it rejected what it took the money under what candle?
Under these candles. These and
nope.
these.
The rejection block is when it goes under a closed candle. So what closed candle what money did it take that was under a closed candle?
Like closed candle.
Remember, the rejection block is when price wicks below a closed candle. So what closed candle did it get the money from? Nope, it didn't even make it. It didn't. Thank you. Look at it. Put your cursor on the bottom of that closed candle and see that the red candle go below it. Where's the closing price at? Where's the closing price? Where's the closing price of the red candle? Where's the closing price of the red candle?
The closing price.
Where's the closing price at? That's the open price. Where's the closing price at? Okay.
Yeah.
Put it on there. Now stop. Put it on the close. Now look to the right. What happened?
You wicked.
Thank you.
Just wait.
Thank you. That's all I'm trying to explain. I'm not talking out my ass here. You keep seeing it over and over again. So what is this telling you? Put the fucking candle line on the bodies. Fuck the wicks. Put it on the body, right?
Yeah.
Okay. Or you're gonna be fucked up out here. I mean, so okay. So now we out of the trade, but just watching price action. What do you think is gonna happen now? Remember, price is due. I think price is due to go higher according to purge theory, because remember it took out sell side, and we haven't really took out the highest buy side yet. So I think price is gonna go higher. But let's just see. Let's just see what happens.
This move was to scare the dummies out. Whoa. Now.
Oh well, I guess I was wrong. But you see how we got in and we got out.
Yeah.
By not being greedy and getting money from the highest up close candles, we already got out of our trades. We didn't catch that big fall right there. How many points is that? Can you get the measuring tool? See how many points that is? Go all the way to the left to where we got in at. To left. On the green candle right there. On the green wick right there. Now go to the left. Right there. Now can you measure it all the way to the top and see how many points that was?
That's like 11 points.
Okay. Well, on US 30 it would have been more than that.
Yeah.
But I understand this is forex. But picking up 10, 20 points a day is better than taking a loss or not making any money. This price action look weird as hell, but I know this is GU. So it's not like it probably worked better in you know what? This I wondered if this works when on London Open. What you think? You want to try it?
Which?
You want to see if this works on London Open too? If we mark up the high, if we mark up the highest high and the lowest low and see if price takes it and go in the opposite direction.
Okay. London will be.
It's supposed to be from 1 to 5, according to ICT.
1 a.m.
Yeah, 1 to 5.
And that's what I've been trying to. I've also been looking at something.
Let's see if it works. It should work, but if not, then at least you see it working in fucking New York Open. According to ICT, he said that it works in London Open as well, but the silver bullet thing, the silver bullet is from 3 to 4 a.m. So I don't know if we should back test on 1 to 5 or from 3 to 4. because he said start looking for a trade between 3 and 4.
What is silver bullet? I've been hearing of silver bullet.
This is a strategy that uses a fair value gap and all that. You could trade. He said a trade setup forms 3 times in a day, between 3 to 4 a.m., from 9:30 to 11 a.m., and from 2 to 3 a.m., 2 to 3 p.m. So he said there's really no excuse. He said you're looking for the same thing 3 times a day. And you should always find a trade, especially if you trade multiple pairs. I just want to see if this works in London. I'm trying to see, should we use 3 to 4 or should we do 1 to 5? I think we should do
3 to 4. London.
Yeah, 3 to 4. 3. Yeah, let's put that line on instead of 9:30. Let's put it on 3 a.m. and see if we can find the highest high and the lowest low. I just want to do this one time because it may be messing up our flow at now, a 9:30 flow, but I'm just trying to see if it, Is that our 3?
Yeah.
Okay, so yeah, just eyeball it. So where's the highest high before 3? So we got that wick high up there. Okay, so we got the wick high, and then we have the lowest low down there. Okay, well, let's see what happened. At 3, it did a rejection block, right? You see that? It did the fucking rejection block thing again. Put your exactly. See how it wick below there? Oh, well, yeah, it looked like it worked again. You see that? See how it did a rejection block? Now remember, you could have went long. So where would you go long at? Since the candle did a rejection block and closed the way it did, where would you instantly go long at?
Yeah.
Right. You could go long on the open right there, or you could have went long right when price hit the rejection block down there, which would have been risky. So now what are you holding your long for, according to the structure?
Well, this high. This high.
No, you would be holding for. Yeah. I guess you would be holding for that high because that would have been like the highest high before 3 a.m. But so it worked. I mean, you would have been a little bit of drawdown, right? You see that? You could have went long. You could have went long on that candle down there right after 3 a.m.
Yeah.
Yeah, you could have went long right there and just endure some of the drawdown, but price just took sell side, so now it has to take out buy side. So I guess the shit works right there as well. So as we continue to back test, let's go ahead and try it again at 3 a.m. on the next candle. Let's go ahead. Hold on. No. Let's go back to 9:30. Go all the way to the right so we don't see price. Yeah, I'm saying go back. Yeah, go all the way to that same day. Just mark up 9:30 again. Yeah. So go ahead and drag that line back over to midnight and then drag the dotted line back to 9:30. And let's just do the same thing over again at 9:30. And then on the next day, we're going to mark up 3 to 4 a.m. again to see if we see it again. But you see how you could have held that long?
Yeah.
We just got to, if you was okay with holding that drawdown, that's why I'm saying, like, you have to know where price is going. Because seeing candles like that, I would have been, like, spooked. Unless I actually knew the price had to take out that high up there. Because it just took sell side. But if people don't know what rejection blocks are, then it's not going to look like it took sell side. Because it didn't take out a wick low. It took out hold on, you going way too far to the right. I mean, did you pass up 9:30 yet? I mean, yeah, you already passed up 9:30. I mean, no. That line right there is the midnight line, and then the dotted line is 9:30. Remember? Yeah. Yeah, just put that on midnight and then drag the dotted line over to 9:30. Yeah, I'm just trying to back test this again just to see. We just want to see it work over and over again. Now, one thing we forgot to do at 3 a.m. is we forgot to ask ourselves, what's the structure? We just started looking at price, but we need to ask ourselves, what's the structure? That's 9 a.m.?
Yeah, that's 9:30.
9:30, okay. Now, this looks perfect, man. So can you scale the charts to the right a little bit so we can look at the structure and see what we have? Scale it to the right. Scale it to the right at the bottom. Remember, we got to make it look like pencils. Yeah, right there. Okay, so what do we see here? Can you scale it to the left a little bit so we can see more of the candles? Make them a little thicker. Okay, right there. Okay, so it looked like it looked like price is ranging. It looked like it's ranging because I can't really see a clear breaker or a clear.
Yeah, it is.
Yeah, it looked like it's ranging. So, okay, so can you scale it back to the right a little bit so we can see what price did last? Okay. Sorry. So what did price do last? Did it take buy side or sell side before 9:30?
Before 9:30, buy side.
Exactly.
Yeah.
Exactly. So, okay, so it did take buy side before 9:30, but what did it do before that? You see, it took sell side. You see that?
Yeah.
Exactly. So that means that it may want to try to take out buy side. So when you see price retracing down like that at 9:30, it may just be going down to go back what? To go back up, right?
Yeah.
Because remember, the last thing it did was it did take buy side. So that means that it may want to take sell side, but you got to look at what happened before that. It took sell side first. So and remember, it may be only retracing down because it just took out a high, right?
Yeah.
What high did it just take out?
These two.
Yeah, it just took out that equal highs up there. So it may just be retracing down only to go back higher to take out what high? Exactly. Now, I'm not saying it's going to do that. But what I am saying is that it took out sell side first down. What sell side did it take out? What low did it just take? Right. So it took out that low. So the algorithm is in a structure to take out the high now. So what I'm saying is my guess is that price is only retracing down because it just took out a high. But I don't think it's going to retrace all the way down. I think it's only going down temporarily, only because it just took out a high. And that it's probably going to try to take out that high at the top. But I don't know. But that'll be my guess. So but let's go ahead and mark up the highs and the lows, and then let's see what price does. This one will be interesting. Yeah, this one will be interesting. I mean, but it could take out that low down there because it just took out sell side. So it may want to take buy side, sell side down there. But let's go ahead and mark up the highest high and the lowest low and make the line thick. And then, yeah. So this one looks pretty good. I actually like when price is ranging like this because it's easier to read because I understand purge theory. Can you make the line at the top thick and the one at the bottom thick to symbolize it's the highest high and the lowest low before 9:30? Okay, you already did it. Okay. Now you have to mark up the body lows. Exactly, right there. Okay, that's the only one we have. Can you mark up the next body low? See the next one below that? Nope, go down. The next one below that. Nope. That you marking up price action don't even mean nothing where price is now. Okay, so where's the next body low at? Hold on. Where's the body low you just marked up? Just point to it with the mouse. Okay, so where's the next lowest body low at? The next lowest body low, where is it? Nope. Price already took all that. Remember, look at the wick. Look at the wick at 9:30. All that's irrelevant. Go back to the where's the next body low at? Nope. Go back to the body low. Thank you. It's right there. Because remember, it may do a what? Rejection block. It may not make it down to the wick. That's what I'm trying to tell you. You still move. I mean, it's a lot of lines, but we're on a 5-minute chart. So, okay, so
already the rejection block.
It might do it exactly. Oh, it's already. Yeah, I see what you're saying.
Yeah.
Oh, I mean, I would just still keep it there because, but that is a good point. So I would still just keep it there just to see because it might rejection block twice. All right, so now let's go ahead and mark up the highs. So we need to mark up the body. We have the highest high, which is the green. I mean, the thick line up there, which is the wick. Now, exactly, we need to drag it up. What you doing? We need to put it on what the liquidity is. The liquidity is above the green candle high, right?
Yeah.
Okay, so you got to put on the green candle high. Where is it? Point to the green candle I'm talking about.
The green, yeah.
Nope. Look at the structure, man. Yeah, right there. You got to put it on the top of the green candle body, the closing price. That's where the money is. Remember, the money is above the wicks and it's above the actual closed candle. Okay, now put it on the next high. You got another high you got to put it on. Nope. No. You don't have to clone it. Nope. Delete that, man. Delete it. You got a line on it that don't even mean anything. Why you got another blue line? Whatever. Use it. Okay, that line. What you got that line on there for? Yeah, drag it up to where it need to be. Exactly. Yeah. Right. Exactly. So now we good. So remember now this is gonna be a little learning lesson now, because price. What happened first? The price took sell side. So the algorithm, according to the structure, the algorithm is in an algorithm to take out the high up there. So I think price is just retracing down right now, only to go higher. But it did just take buy side. So that means it may want to take that low down there, right?
Yeah.
Okay. Well, let's see what happened. One candle at a time. Hold on. Wait. Don't go to the right. Okay. What happened? Okay, so price actually, it just took out a low right there. You see that?
Yep.
It did take out a low that we didn't mark up. We didn't really have to because price had already took it at 930. Mm-hmm. So it might want to go long right now. According to the structure and what we've seen over the last, 4 days, we should go long right now. But I'm thinking that price may continue to go lower. So I'm probably just going to wait until I see a certain kind of green candle. But according to what we've been seeing, we should go long right now. But not really, because price didn't officially take an actual low yet. You see that?
Mm-hmm.
Just go to. I'll wait one candle. It's only 5 minutes. Go to the next candle. Okay. Yeah. See. Yeah. I was thinking that price is probably trying to see that low down there. That's actual low. You see that it just took. So it just did a rejection block. So I'm thinking that price may actually want to take out the actual low and then go higher. So let's go to the next candle. Okay, right there. You see how I did a rejection block again?
Again.
So I'm fucking trying to tell people, man. Actually, I'm probably going to go long at that candle right there. So what you going to do? I'm probably going to go long at the open right there. And my destination will be that first blue line up there. So what are you thinking right now?
Yeah.
Remember, the next few candles could be red now. Now, hold on. My stop loss is going to be below that red wick down there. You see that? Point to it. Yeah, that's where my stop loss is going to be. If I get stopped out, so be it.
Yeah.
But I'm going long right there, because what we just seen is if price takes out an actual low, which is the lows we marked up before 930, we should go long. But price could actually want to go lower and take out that thicker blue line down there. You see that?
Yeah. Because
that's the actual wick low. But it did do a rejection block and it could take off. So I'm going long right now, right at the open with three positions. So what are you doing?
Yeah, same. Long. It's currently going bullish. Or we should wait for. Yeah, it's bullish.
Okay, let's see what happened.
Okay. Now it's going to go bullish.
Okay, I'm stopped out. Okay, so I think it may actually take that low down there, the thick candle low, the blue one. Can you delete those two blue lines to symbolize that the lows are taken? Yeah. Yeah, delete that one too. All right, so I'm stopped out. Based on what I'm saying, man, it's probably gonna want to fucking take out that double blue line. So I'm not doing anything yet. If it takes off, then I'll just get in on the next green candle open price. I think it's gonna take out that low, the wick low. But hold on, it is a consequent encroachment of that wick, right? Put it on consequent encroachment. of that last down close candle wick. Yeah, right there. Yeah, see how it's at 50%. It could take off right now. Yeah, I think I want to take out that low. I'm just gonna wait. Yeah, I'm not getting in yet. Yeah. See, now I just took the low. So I'm gonna go ahead and get in on 3 long positions again. And I may see 2 or 3 other bearish candles, but I think it's done going down, and it may want to go higher now because it just took sell side. So now she want to take out buy side. So the next 2 or 3 candles may be bearish. I'm still gonna hold. I'm not gonna put a stop on this one. I'll just manually get out. That's what I'll probably do right here. Boom. Holla at your boy. Hold on. Stop right there. Hold on. Now, hold on. Go back to the right. Before it took out that low. Right there. Now, we have new low. Remember, we have new lows we have to mark up. New highs we have to mark up. Where is it? You have to clone that skinny blue line and put it where exactly? Because remember, we trying to get out and scalp it right beforehand. So, we're only picking up maybe 10 points, but we may have 2 lots on, So if you could clone that line and put it on the top of that green candle. Because remember, price could reverse and we may be wrong, but we're trying to get something off the table. Yeah, right there. Okay, so now go back to the left, 1 candle at a time. Okay, like I said, price took that low and I was in on a buy with no stop loss because I understand the candle price action. Keep going to the left. Okay, so I'm in on 3 buys. Boom. I'm out right there with 2 buys. I still got 1 on. I'm gonna hold my next buy all the way up there to that blue line, but it may not make it. If so, then if price goes below, then I'll be what? I'll be just break even. But I'm out the position. You see, it rejected above that candle right there. That could have been an area. So let's keep going to the right, to the left. Oh, I would have felt stupid right there. Well, I still got 1 position on. Okay, let's keep going. We're gonna see some red candles most likely. Okay. Well, I definitely would have got out before. When I seen the price reversing like that, I would have got out before I got into any drawdown. So 1 position would have been closed at the rejection block, and then 2 positions I would have just got out before price even went all the way down there.
Yeah.
All right. So. Yeah, man, this shit is crazy. Yeah. Yeah. Well, I thought it would have made it up there, but nah. Well, it does look like you can go long once it hits the actual area of once it's the actual low or high before 9:30. Be a quick little scout. Yeah, well. All right, man. Can we check on that move? Can we check on the 5-day Asian range thing before I let you go?
Okay.
Can you check the chart just so I can show you, or I can pull out my chart and you can see the chart and I can show you my charts. I just want to show you, so you can see how it worked, because remember, it's going to show up next month as well. I don't know which chart you had the 5-day thing on.
This one now.
If you don't have it marked up, I can just pull up my chart and just show it to you because I have GU and EU marked up. Okay, yeah, you do have it marked up. Okay. Yeah, you got to go to the daily chart. Oh no, it's not on this one. It must be another chart. There it is, right there. Okay, can you zoom into that price action? I just want to show you that my shit works. I'm not playing out here with this one especially because I came up with this. Okay, so this is a daily chart, right?
Yeah, daily.
Okay, so Okay, you have to. Can you zoom into the first 5 trading days and put those lines exactly where they need to be? Because remember, you don't have them on there perfectly. We was eyeballing the last time, but when you actually trade, it needs to be on there perfectly. So can you zoom into that box and make sure it's on the body of the first 5 trading days? Just zoom into the red line at the bottom of the bodies. Yeah, just zoom in. Yeah, right there, exactly. Make the line real thin so you can zoom all the way in. Make it kind of thin. Go down, go down, go down, go down, go up a little bit. Go up a little bit. Just go down, go down, go down. Right there, right there. Just let go. Yeah, exactly. Let go. Boom. Exactly. See, that's how I do it because I zoom all the way in. Now put it on the bodies. Drag that thing up to the bodies. You have to have it on there perfectly. I guess you could just drag it all the way up. Yeah, just drag it all the way up. Now you have to go to the top of the body the first 5 trading days and put that body, zoom in like you just did, and then make sure no, it's gonna take too long. You gotta scale out. You gotta scale out. It's gonna take way too long for you to, yeah. Now zoom back in and go to where's the 5th trading day at?
5th trading, yeah.
Yeah. Is that the 5th trading day? From where's the first trading day?
This bearish candle.
Okay, cool. Zoom into the 5th trading day. Make sure that line is exactly on the body. No, don't move it. You're gonna have to move the whole box. Hold on, go to the left of the box. You have to find out where the circle is so you can move it down. Hold on, zoom back out. Zoom back out. Hold on, no. There it is, right there. The circle is right there. Go back up. Go see the circle to the left. Now drag it down to the body. I just want to make sure it's on there perfectly because it's important. That's the 5th trading day right there, right?
Yeah.
Okay, now can you zoom back out? Yeah, zoom out. All right, so that box at the top, can you make sure that box is the same range as the box that you drew at the top? Can you just drag it down and make sure it lines up perfectly with that box you just drew? You just remarked up. See the red box at the top, the little skinny box, you got to make sure it matches up perfectly. You just drag it down to make sure it matches up perfectly. Yeah, just drag it down because you have to make sure it matches up with the 5-day body range. Drag it down. No, leave that little box right there. Leave that little box right there. Yeah, or just delete it or whatever. I'm just trying to make sure that box range matches up perfectly. You see what I'm saying? Drag it down, drag it down, drag it down. Drag it down to the 5-day Asian range body because it's not perfectly matched up. Drag it down, 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 drag it down right there. Now zoom in and make sure it's at the exact high and make sure it's at the exact low of that body range. Yeah. If you could zoom in and then, because it's going to help with the measurements. Yeah, just pull it up and just eyeball it. See how it's kind of off? Yeah, drag it up, drag it up. Boom. Okay, now drag it up and put it exactly on top of it. Yeah. Okay. Yeah, drag it up. Nope, drag it up and put it on the top. Yeah, exactly on top of it. Yeah. Okay, now put that 50% line right in the middle. Yeah. I'm about to show you something. Because I saw it. You see how it kind of failed? But I'm about to show you why it failed. Okay, now zoom in and make that line as straight as you can. Put that line on 50% and make sure and zoom in and make sure it's straight because it's kind of crooked. Yeah, zoom into the red dotted line and put it on 50%. Yeah. Now scroll all the way to where price went up and reversed. Scroll over. Just drag the whole chart over. Yeah, you don't have to worry about that. Just drag the whole chart over. I'm about to show you something. Zoom into where price wicked and reversed. I'm about to show you something. Okay, so it failed to hit the line, right?
Yeah.
But hold on. But remember, we don't trade patterns, right? The pattern. If you watch my videos, what do I say? I say this pattern works, but I follow the market structure itself. So the market is not responding to a pattern; it's responding to what the orders are. So okay, so what do you see here? So what do we have? So let me ask you. So why did price reverse? You have it marked up already. Why did price reverse? It's right in front of your face. Why did price reverse off of? Why didn't price make it up to that line and it reversed? Hold on. Exactly.
Yeah.
So what I'm trying to hold on, and also I'm about to show you that price reversed because it's going to where the orders are. Sometimes you have to mark up the quarter points right around this line. Do you know what quarter points are?
No.
Quarter points is the 20, the 250, the 500, the 750, and the 00. Put your cursor up to where that wick is. What's the high? What's the high right there? I mean, what is that? 390. Okay, so hold on. Scale to the right and let's see what a 50% was, because you have to mark up the quarter points around the 50%. So scroll to the right a little bit and let's see exactly what a 50% line was at. Yeah, I just want to see what price market was it at. Yeah, scroll to the right and let's scroll to the right because we got to find a 50% line. We see the line, but I want to see it on the actual block because remember that line is crooked. So scroll to the right so we can see the 50% box. Scroll to the right. Yeah, right there. So put your mouse. Yeah, go to the top up there because that's the false run. So go to the top. Yeah, 50%. Well, what price is that on right there? Six. The quarter points is okay. So basically, it's close to the 500 level. Go up to the 500 level. See where it says 465. If you go up, it's 500. Go up to the 500. Nope. Go up. Go back up to the 50%. That's 461, right? So go up to 500. That's where the quarter point is, right there. Put a horizontal line on that quarter point. Go ahead and get the horizontal line. Put it on the quarter point, 500. Wherever you see 500, draw it right there. Now listen, this is how this shit works, man. You see, you have to mark up the quarter points around the 50% of the one standard deviation because sometimes it won't make it up there. Now we understand that it hit a breaker and it reversed, right?
Yeah.
So you have to have the breakers marked up and you have to have the quarter points around key areas. ICT even do this in his videos. He say, look, yeah, price is going to reverse off of a breaker, but price is going to where the orders are, not where the breakers are. So sometimes price will reverse off of an area, and you'd be like, you didn't even make it up to the breaker. Why? It's because price reverses off these things called quarter points. They also have something called micro quarter points. So these are the 20s, the 50s, and the 80s. So what I want you to do is clone that blue line and make a dotted line. Clone that blue line, and we're about to mark up the micro quarter points. Clone it and make it a dotted line. And so I'm about to mark up the micro quarter, make it a dotted line. Okay, so what we're going to do is you have to find the micro quarter points. So it's the 20s, the 50s, and the 80s. So what you have to do is drag that line down below the blue line. Drag that down below it. And then we're going to find the 20, the 50. Go slowly. Go back to the blue line. You're going way too fast. Go back to the blue line. Go down slowly. We have to find the 8, the 50. Hold on. You see where it says 490? Go down to where it says 480. That's the first micro quarter point. Keep going. I'm about to show you where it stopped. Right there. Now put the line right there. Clone it and do another one. I'm about to show you why the shit stopped right there. The price is going to where the orders are, not to where these goddamn patterns are. The orders are where the quarter points are. Keep going down slowly. Now it's the micro quarter points. Hold on right quick. Stop. The micro quarter points are the 80s, the 50s, and the 20s. So the next one we need to stop at is what? The 50, right?
20.
The 50, because we already did the 80, right?
Yeah.
Okay, so the next one is 50. So stop at 50. Boom. Now do another one and put it on the 20. Watch this. Put it on the 20. Okay. Now the next one is 00. So we got the 00, the 20, the 50s, and the 80s. So go ahead and clone that line and put it on the 00, the next one, which should be 06400. Clone that line and put it on the 00. These are quarter points. This is extremely important. Okay, put it on the 0, 0. Go up, go up, go up. You got to put it on 64,000 or 6,400 or whatever. Yeah. Okay, now go ahead and scroll to the right. You may have to do one more. We'll do one more. Clone the line again and go down to the 80. Yeah, clone the line and go down to the 80. That's the next quarter point lower. It's the 20, the 50s, and the 80s. So go ahead and stop at the 80. Yeah, and then scroll over to the right and tell me what price and what number price stopped at. So what I'm trying to tell you is that sometimes you have to mark up the quarter. Go to the 80. It's on 83. Go down, go down, go down, go down, go down, go down, go down to the 80. Yeah, right there. Now go ahead and scroll over to the right and let's see what order price stopped at. Stop playing with me, man. Stop playing with me. Stop playing with me. Stop playing with me. See that? It stopped. It stopped exactly. You have to mark up the quarter points around the 50% of the standard deviation. This is not something I'm coming up with because price didn't make it up there. If you watch my other videos with other students, I tell them the same thing. So if you look at it, you have to mark up the quarter points around the 50. For next month, this is what you got to do. So just rewatch this video. So if you see a breaker or a bullish breaker or a bullish mitigation block close to the 50%, you have to mark up the quarter points above and below the 50% line. Yeah. So that's what I'm trying to tell you. That's why price stopped right there, because that's where the orders are. It's not like it's going to make it to the 50% because when you go to EU, go to GU. Do you know GU? It made it to the 50%. I don't know if you know that.
GU made it.
Yeah, that's what I'm trying to tell you. Yeah, because and so that's what I'm saying. But still, even though it made it to the 50% of the line, now go scroll back down and tell me where I told you should get in at. Then I'll let you go. Go ahead and scroll back down so we can see the whole chart. Now, where did I tell you to get in at according to the way this pattern works? Where should you have gotten in at? Where was your entry at?
Normally, the entry is supposed.
Hold on. Where's the first 5? Okay. Okay. So you get in when price closes where? Remember, this is just a quick look. This is a quick little scalp. So based on what I told you so far, where would you have gotten in at? When price closed where?
Above this line.
Exactly. What box is that? What is that? That's a 5-day body range, right?
Yeah.
Now remember, your colors and stuff will be different than the way you have it now. I just had you do it like this so we could just speed it up last time. But what I'm trying to tell you is this shit is gonna happen next month too. This is the guaranteed move, dude. So what should you have done whether you gotten in or not? What would you have gotten in at? No, you could have got in at the open, or you could have got in on the retrace of the 50% of that candle. See how I gave you 50% right there?
Yeah.
Yeah. So you could have put in your heavy leverage position right there and held it to where?
To the 1.
Yeah, you would have held it to 50% of standard standard deviation, but you would have been cautious because you're like, okay, well, price may reverse right off of that breaker low, like it did, right? And then you see the little micro quarter points before the major quarter point, which was above the 50% of the 1 standard deviation. So I would have just went short at 1 or 2 levels. It broke 2 micro quarter points and reversed. So that's why I'm saying, like, next month you got to rewatch this video and be cautious of that, because you can go long or you can go short on both on GU and EU next month in the same direction. And you can also use another pair. Like you could use UJ and you could use GJ and EJ, right?
Yeah.
You could do the same thing. Because remember, now sometimes what's going to happen is, like next month, GU may hit 50% a day or 2 before EU. So what is that? So what is that telling you? If you see EU going down, what are you thinking? Now remember, hold on. Next month, if EU hits the 50% of the 1 standard deviation one day, and then like a day or 2 go by and you see GU still going down, what should you be doing? Hold on, let me say exactly. You should be buying, because remember, they all move in the same direction. So if you see, what I'm trying to tell you is that sometimes you'll see GU hit the 50% before EU. It may do it a day or 2 later. So what I'm trying to tell you, if you see GU hit the 50%, but the next day you see EU going down, then what the hell should you be doing? Buying, right?
Yeah,
You should be buying because you're like, okay, well, GU already hit it. So that means that EU has to hit it. Yeah, it's just going down for whatever reason. I'm trying to tell you, this is exactly what US 30 and S&P 500 do. Like S&P 500, the last 2 months told me exactly what US 30 was going to do. It hit the 50% of the